Hey, good evening, everybody. Welcome out to the weekly weekly training webinar for members of Tax Sale Support. We love having everybody come out and join us every week. We talk about different things, so you're welcome to jump in or ask questions at any point. If this is I really doubt this is anybody's first time here. I think we've got people who have mostly been here for a long time, but I'm Shane Foray. Sitting next here to Stephen Swenson.
Yeah, exactly. Excited to be here tonight. You know, we've had questions come in over the last week or two, just from our members that have concerns about evaluating property and determining property and really kind of doing that final due diligence before determining how high a bid you're going to go on a particular property and really doing that market research. And so that's something we wanted to go over tonight and kind of go through and explain how to evaluate property, how to do comparative market analysis, and what tools that we'll use to go about and do that.
Yeah. In fact, we've got some great properties to look at, and you know, there's always stuff going on with different sales, different upcoming opportunities. It's also getting to a time of the year where it's going to get really busy soon, you know, and there will be lots and lots of tax sales taking place. So it's a good time to get your ducks in order right now, because you'll want to come out in the new year swinging early. You know, you don't want to wait, because there's a lot of stuff that happens in the first 3 months.
Yeah, definitely. You know, and it's going to be a great time. This next year, I think, is going to be an awesome time to be involved in tax sale investing. There's going to be a ton of different auctions taking place and just a lot of great deals.
Yeah, and we're still seeing excellent opportunities even with the auctions, which, granted, certain auctions you're going to find more competition. Sometimes, you know, there are some where people will still pay crazy prices, but overall and across the board, the prices are still excellent, and there's still not nearly enough competition to saturate this market, and so many different methods that you can use to buy. So yeah, I think the timing on it is really good.
Yeah, I think that's a good point. Now, as far as news and announcements, one announcement we wanted to make is for any members that haven't had their investor strategy call yet. I'm sure a lot of our older members have, but any new members, or if for some reason you haven't had your strategy call, go ahead and just contact us, email us, use the contact form, or just send us an email. And we want to set up a strategy call to at least get all our members pointed in the right direction, spend a few minutes with you, and see if we can help at least get you pointed, you know, get you started going the right way.
Yeah, I think we'd like to at least talk to all of the members, you know, at some point, and get to know them and find out a little bit more about what you want to do, and you know what you're looking to accomplish. We're always quick to, you know, give you hints or suggestions for things that, you know, that might work or might not. And it's interesting. I think coming into it, though, I think everybody that's here, you're doing training. I think you're probably grasping things pretty well here with a lot of the core principles and concepts related to tax sales. A lot of it from here on out is just a matter of finding the properties and kind of going through the work to pick them up. And ultimately, it's what we want to help you guys do. It's really about making money with your investments. And so, you know, we really want to help each one of you do that. And I think it's one of the reasons why doing a quick call with us can be helpful. Just because when you're getting started, sometimes, you know, you might have a good idea of, you know, the best way to begin, but we might be able to tell you something that would simplify things for you quite a bit, or might save you a lot of time. And so, you know, we feel like it's definitely worth it to take the time to try to talk with people and see what we can do to help. So yeah, definitely let us know if you haven't done you know, a call like that, and we'll get it set up.
Yeah, I think that's a good point. I mean, essentially, that's what the strategy call is about, is spending a few minutes with you and really helping you get started the right way. In addition to that, one other announcement we had was that we do have secondary tax deeds available for all of our members. essentially for all of our members of taxliensupport.com. So if you actually go to the list center and click on under the property inventory, you'll be able to see what different tax deeds we have available currently as we get tax liens in as well. And so, you know, as far as the secondary inventory with our coaching students in our 3-day, we'll go ahead and you know, essentially they can get the first choice. But we have a lot of additional properties that come in through either us or through our partner Mark, and so those properties are going to be available for you to check out on the website in the meantime.
Yeah, absolutely. In fact, you know, a little bit further on in the webinar, when we jump off the slides for a minute, we'll take a look at it. You know, if we remember, we'll take a look at some of the secondary properties that are out there later on here. Okay, and anything else we want to say about, you know, in terms of the mentoring, it's really a good opportunity. We love doing the mentoring with people, and it is really a process of, well, when it comes to getting started, buying real estate, selling real estate, it's not all stuff that happens overnight. It's kind of a process that you get going, and we love helping people get that process going. The process going where you're starting, you know, where you buy things, and as you buy things, you can begin selling things, and you know, you keep buying things and keep looking for more things to buy, and it becomes this. It becomes almost a system, you know, where you're constantly looking to invest, and that's what we want to do with that, with each one of you. If you're struggling to do it on your own, chances are you might need additional help, and you know, there's nothing wrong with that. That's how people learn how to do lots of things forever, and so, you know, you probably know, or I don't, maybe some of you don't know, you know, that we have different mentoring or coaching available, but we wanted to do everything we can to make it highly affordable for you, and so that way we basically can work with you over a longer period of time, and basically work with you towards success. You know, we've got a base of people here that we work with, and it's our favorite thing to do.
Well,
so,
yeah, definitely. I mean, you know, working one-on-one over a period of a couple of months gives us a great opportunity to essentially take these students by the hand and take them step by step. And so what we wanted to do is we wanted to offer our members, just our members, a special offer for our first package. And usually we offer just 6 one-on-one mentoring sessions. And what we're going to do is we've added 2 additional bonus sessions, so that we'll be working with these students for the next essentially 2 months. And then in addition to that, we're going to include 6 months of hotline support. And so that's something that didn't come with the normal package one. And so that essentially means that after those 2 months, you're still going to have the ability to give us a call, either Shade or me, and we're going to be able to help answer any questions for you.
Yeah. Oh, and it also has a little bit more of the membership time. You know, it's a 1-year membership instead of the 6 months, I think.
Yeah, exactly. And so really, you know, that's a $6,400 value. And really, if this package was sold, you know, through a seminar company, it would sell anywhere between $6,000 to $10,000 easily. And so, you know, we're able to do this because essentially we just work directly with our members. We don't have a big sales force or a seminar crew or anything like that takes up a huge expense. And so, you know, with these students, and you know, it's been great. We've started working with one of our students, Michael, and I don't think he'll mind us using him as an example, but we help him, well, and he's been doing a huge amount of work himself. It's great to see an investor and a student really, you know, take charge, but he purchased his first couple of properties this week. And so that was exciting to walk him through that process of submitting those offers and getting new properties that we're going to be submitting offers on next week.
Yeah, and the more you do it, the more you understand about the way it works, and the less mysterious it becomes. You know, rather than it being something that you're not really sure about, you know, that doubt basically is removed. You know, eventually, if you know, the more information you learn with this, and the more you do it, the less fear there is, you know, involved with any part of the process. It can get to a point where it's not scary, you know, to make the investments the way that for a lot of you right now it probably feels.
Definitely. So let's get into the webinar tonight, and we're going to be talking about evaluating property and evaluating property value.
Oh, yeah, actually, let's see here. Whenever we're looking at properties, part of what we're doing is trying to determine what the value of the property is, and that can mean a lot of different things. And so it's important for us to understand the different types of values, but then also to understand how to determine that value so that when you are looking at potential investments, so you can come up with bid to value ratio, and so that you can try to go through your list of properties and sift through them. Find the best ones. Make sure that the ones you end up with are the best.
Yeah, and so as we're evaluating property for tax liens, really just going through and getting the county's assessed value and checking out Zillow and checking just quickly some comparables and things like that is usually going to be enough research for most of your tax lien investing. But for tax deeds, we're going to need to do a lot more due diligence and really determine what that value is, because we're going to be buying the property outright. We're going to be the new owner.
Yeah, it really is. With the liens, the only thing we really need to make sure of is that the lien is placed against a property that has significant value, has use and value, and beyond that, we want to check for what the roll-up is on it. Make sure that that we understand basically what's required in order to foreclose on the property, if that's if that is what were to occur. But chances are it will redeem, and so we'll basically make the investment and we'll end up getting a check in the mail. But like Steve said, when we're buying the deeds, because we are acquiring the property, there's more research that goes into it, and part of this is to protect you. It's to help you maybe distinguish between investments. So you can pick out the best ones, but also I think it's about avoiding a lot of the mistakes that you can make here as you're picking up property. It's a much different type of commitment when you're buying the property, especially when you're buying it for a purpose like to resell it. That changes the types of properties you look for, and tax deeds, though, and evaluating property is something that we do on such a regular basis that it almost becomes second nature. And one thing that would be nice about it is that one of the ways that we evaluate tax deeds is through comparable market analysis, basically through comps.
Yeah.
And it's going to be great tonight to get the chance to kind of go through and do a comp or see comps and how much easier it is now than it was 20 years ago.
Oh yeah, when I first got started in the real estate industry as a real estate agent, doing comparative market analysis was something that wasn't really available or wasn't something you could do very easy as just a normal real estate agent. I mean, to get that information, you'd really have to get it through the county. Unless you're an agent, you didn't have access to the MLS. So a lot of things have changed and made it a lot easier to do comparative market analysis, which makes it easy for us.
Yeah, in fact, a lot of the things now that make it easy are websites. Different property valuation websites, make it a lot easier for us, and just some of the different services that are out there. I mean, there's not just one. There's lots of different services, that offer a variety of tools for investors. Especially those that are investing out of state. So let's first talk about the different types of values. I don't think we'll have to dig too far into each one of these because they're pretty simple. We can pretty well just almost explain what they are, but there are lots of different types of values that are attached to properties, and which one is used a lot of times depends on a lot of factors. Depends on the county, depends on, different locations tend to use different lingo or jargon for their they have their own terms. But these are the main values that you'll need to at least know and understand what they are.
Yeah, these are the common real estate values that most real estate investors are going to see at one time or another. So we'll go through and talk about each one of them. The first is probably one that most of us are used to, and that's the tax assessed value. And so essentially this is the value that's placed on the property by the county tax assessor. And so we'll find this through searching the county records. But what the assessed value does is it gives us an indication of what the property value would be. So it's not going to be exactly what the market value would be, but it's what the county's essentially taxed or taxed that property. And so usually the tax assessed value will be below the market value is a general rule, but that's something that we're going to come across, and it's really probably the most common type of value we're going to see versus that, or when we're looking for the market value.
Yeah, in fact, I was just going to say when we're looking and just at a glance figuring out bid to value ratios, a lot of times we're just doing that quickly with using something like the tax assessed value. Although something else just to note is that some counties include both a tax assessed value and then what they would consider to be a market value. They'll basically give you both on the assessment, which I thought was kind of interesting. I used to think that whatever the value was on the assessment was considered, the assessment value, but in reality they're totally different.
Yeah, well, and that'll be in some states where they have the assessed value is just a portion of the market value, essentially. So they have a market value, and the assessed value will be 20% of it or 50% of it. And then there's other counties where you'll just have essentially the assessed value be one value, and then for the market value, you essentially figure it out on your own. But even with their market value, that doesn't necessarily mean that's what the actual market value is. If the real estate, that's kind of what they're just basing, that type of real estate would have a value of.
Yeah. Yeah, I think that makes sense. An appraised value is a specific value attached to the property by an appraiser, essentially a professional appraiser that will determine the value of the property, probably for a specific purpose, like some type of a loan, lender, something like that would be involved.
Yeah, that's pretty much it. I mean, appraiser value is what the appraiser is going to do. So the appraised value could be higher than the market value. It could be lower than the market value. That's one thing about the appraised value is that it's determined by an appraiser. So depending on what you're trying to get the appraiser to do, that could totally determine the appraised value. So if the appraised value wants to come in low, so that they can prove their property taxes are lower, then that may be one strategy. Or if they want to try to get a loan where they essentially need to kind of stretch the appraised value above the market value.
Now, wholesale value is the value that a lot of you should be thinking in, or should start looking at and thinking in more often when you're looking at something like selling property. Unless it's a specific type of property, let's say that you're going to get full market value for you. If you're going to sell it if you're going to sell it with a warranty deed, and you're going to sell it to a realtor, let's say, then you're just going for full market value in that case, and it may take a little while, but you'll make more money. But for those that want to do things faster, let's say you don't want to worry about quiet title on a property. Maybe it's something more about being able to buy and sell the property quickly. Then we're looking at wholesale values. And for us as investors, this is really where we specialize in, because we basically buy it really we buy it at cheaper than wholesale value. Really, we buy it at tax sale value, at fire sale value, essentially.
Yeah. Wholesale value is the price that you're going to be reselling the property to an investor through a quick claim deed, like Shade said, without going through quiet title. So this essentially be the value that's sold from investor to investor. Or, if you're selling it to a property owner, essentially you're selling it to them for a wholesale value. Yeah, which a lot of times, I think people, when it comes to the type of property, that may or may not be an issue for people too. It really kind of depends. But with like land purchases, it's less of an issue than it would be. As the value of the property goes up, the greater the likelihood that it's going to be an issue. Basically, if it's a high value piece of property, then chances are somebody's going to need to borrow money in order to buy it.
But if you're talking about cheap properties, then you don't have to worry about that. You can move them quite a bit quicker, because you don't have to jump through so many hoops.
Yeah. Now, insured value isn't something you're going to come across a ton unless you're essentially insuring the property. And this is just the amount or the value the insurance companies will place on the improvements and structures on the property. So it's usually going to be the amount it would cost to replace or rebuild the property.
Yeah, let's move on here. And mortgage value, I'm sure some people are probably familiar with that. Basically, the value given to given by the mortgage company. Basically, it's what they'll loan on the property. Essentially, is what they consider the mortgage value.
Yeah. And if you're getting a mortgage value, or if you're having a mortgage value done, it's generally going to be, based off of the appraisal value.
Oh, there's actually a really good question here. And by the way, hopefully the screen is fixed now, or it's looking okay. I think it was blocked. Maybe it was at the very beginning. But no, the question was actually, New Jersey tax lien certificates are issued quarterly, and they typically bid up to a higher premium. What's the best way to purchase New Jersey tax liens, with this in mind?
That's a great question. I actually answered a question about that on the forum.
Yeah, well, we get a chance, we can go back there and we can look at it, and because we can answer that through the forum if we want.
Yeah, and actually I responded kind of a little bit about New Jersey's a little bit different state. We did a webinar on it a while back, and so maybe that's something we include in a future webinar.
Yeah, they are kind of a unique place. In fact, that's something else that we can do for webinars if people are interested in it, is we can focus on specific states. So if there's a place like, New Jersey would be a great one to do to focus on and do a session on. And there's a lot of other places that probably good too. Yeah,
well, really when it comes to New Jersey, it's just going to be a matter of, if you're within that area, then you can attend local auctions. If not online auctions. If there's a live in-person auction, because then you're usually just going to have the local, just the local people there. And then, of course, if we're doing online auctions, it's going to be really just a matter of trial and error. Because when it comes to New Jersey tax liens, we don't recommend, upbidding the premium.
Yeah, in fact,
even if you can buy this, the additional taxes and getting a higher interest rate on that, that's kind of a hope, not something that's known. And so if you're up paying the premium, then that could really affect your interest rate. And so it's really kind of something that would take a little bit of time to kind of go through.
Yeah. With liens too, one of the things that we have avoided is so much easier to find over-the-counter liens that I don't always find myself looking at primary source like major tax sales to get the liens because of some of the competition, and I guess enjoying getting them over the counter. But at the same time though, there are still a lot of live auctions that offer great opportunity, especially the ones you can attend there in person are going to have great opportunity. If you have local sales that are conducted live, it's worth going to those just because the competition is limited by whoever's going to show up there in the room. That's always going to be much less than you'll find with most of your online type auctions.
Yeah. Now, market value, essentially market value is what we're going to use when we're really evaluating property. It's really what a buyer and a seller is willing to pay, but essentially we can kind of determine what that is based off of what it's selling for. So the market value is really kind of what the property sells for.
Yeah, in fact, it's interesting how the markets shift and they change constantly, and they can be vulnerable to different changes. The markets go up and down, but essentially, yeah, there's always going to be that price at which stuff sells for, and ultimately that's what it's worth. What somebody's willing to pay, what it's actually selling for, which is why you know, when we're doing something like comps, it's nice to use something like properties that have sold as you know, what you base your comp on, you know, because that's going to be the best proof of what a property is actually selling for in the area.
Yeah. And, you know, what's the difference between a market value and market price? Really, the major difference between the two is the market value. The market value is essentially how much the buyer and the seller is willing to pay for, and the market the market value. I'm not explaining this very well.
Well, so you'd say the market price is what the owners think it's worth, and what the value would be, what the agreement, what they come together on?
Yeah, so market price is what, you know, a ready buyer is willing to pay for the property, what the seller is willing to accept. So essentially, market price is what it actually sells for. So the market value of the home is $100,000. The market price is what it sold for $95,000. Got me a little tongue-tied there for a minute.
Yeah. Oh, yeah, that makes sense. So in other words, and that because oftentimes once you basically have what a property's value is, there's always still a lot of times some small degree of haggling, I guess you could say, on the price, and yeah, basically once you have it up to market value, and that's what you're paying, basically it's just a matter of what you can agree on. You know, that makes sense, basically. So the main things that we look for when we are trying to figure out what property is worth is we use this acronym. You know, first, you know, you always hear us talk about looking for properties that have use and value, but this STUD acronym really addresses other issues that you look at with property that are also important. You know, like scarcity, you know, transferability. You know, scarcity meaning, you know, how plentiful or hard is it to find property like that? You know, how transferable is it? You know, can it be sold and transferred to a new owner? What can it be used for, and what kind of demand is out there for it?
Yeah.
Okay, so, you know, in fact, maybe what we can do is we can start looking at some of the comps and things too. Let's see what we've got here. Yeah, let's talk about each one of these so that people basically have an idea here when we're talking about scarcity and how it would apply, and how sometimes we'll use, how sometimes we'll search out and look for other property that's for sale in the area, so we can try to get an idea of what the scarcity is like.
Yeah, exactly. I mean, you know, scarcity is something that we're totally going to evaluate when we're evaluating real estate. So if we're, you know, looking at a building lot, and we looking at a $10,000 building lot we want to pick up for $500, but there's, you know, there's 100 or 200 or 300 properties for sale in that area that are listed for $5,000. You know, there's not a lot of scarcity there. There's a huge, you know, there's a huge amount of properties available. The less amount of properties that are currently for sale, the easier it is to sell the property. The easier it is to find a buyer for that property. So it's definitely something that we're going to look at when we're evaluating real estate or evaluating an area.
Yeah, and a lot of times we'll measure scarcity according to, you know, properties that are currently on the market. You know, that's one of the ways that we can kind of measure it is by what's currently on the market and you know, what we can find, basically. But it does involve, though, you know, this is where you start to kind of look into your exit strategy and how you're going to monetize the property. And this is also done before you buy the property as well, because what you're trying to determine here is, you know, what the best exit strategy is, and you know, what's going to be most advantageous with the property. And so one of the things you're going to check is how much of it, you know, how much similar property out there is for sale. What is my direct competition, basically, you know, for buyers.
Yeah. Now, transferability has to do with transferring title and ownership. And so with tax deeds, a lot of times if we're not going through the quiet title process, we're going to use a quitclaim deed. And so transferability is definitely going to affect the value. That's part of the reason that we're going to be wholesaling these properties. is because we haven't gone through the quiet title, and essentially we're going to be selling this to an investor or to a property owner that's looking to get the property at a discount. And so obviously if we go through the quiet title process, that makes the transferability easier, and you know, at least warranties the deed. So at that point, that would increase the value of the property. So that's something that's going to affect the properties that we buy. But if we go into that knowing it's not a big deal, because we're planning on wholesaling the property anyway.
Yeah.
But that you can see, that's directly, you know, that's that's an example. You can directly see how that transferability comes into place.
Yeah, yeah, it makes it makes a big impact really on the overall profitability, and you know, it's interesting because in some cases it might be worth it to wait out that time. You know, you can make, you know, essentially the reason why transferability is an issue is because as the price or value of the property goes up, so do the chances that somebody's going to need financing in order to buy it. And once they need financing, then the issue is you have to have a warranty deed, or you know, you have to be able to get title insurance when you are selling the property. If you're buying a property, you're getting a loan, or if somebody is, you know, if somebody is buying a property from you and they need to get a loan in order to do it, then one of the requirements their lender is going to have is that is title insurance for the transaction. And the issue with tax deeds, if you haven't heard this before, there's more information about it in the materials. But essentially, a tax deed isn't a warranty deed. You know, it is like a quitclaim deed. You know, you might even consider it a clouded title. You know, as they sometimes refer to them. You know, it doesn't mean that it doesn't convey full ownership, because it does. They still convey full ownership, but it's different from a warranty deed. And part of this is about kind of understanding warranty deeds too, and how they work. You know, the implied warranty they have, and how they essentially go back in through the line of ownership.
Yeah.
You know, essentially the warranty deed has that warranty or guarantee with it that the property is free and clear of any kind of claims. And when you don't have that warranty deed there, it doesn't mean that there's something owed against the property, but it changes the transferability, like we mentioned, because suddenly you can't get borrowing on it unless you take it back through quiet title. And so, you know, what that will do is it can make it so you can sell it faster, but it's going to be at a lower price, or you can decide to hang on to it a little longer and sell it for more.
Utility, and utility has to do with the flexibility, or what the property can be used for. So the more uses the property has, the higher the value. Kind of example would be difference between a commercial property and a residential property. Commercial property may have more of a utility than a residential property, so maybe that would increase the value. And so, you know, as we're looking at different properties, the more uses the property could be used for could obviously increase the value of the property and make it easier to sell.
Yeah, absolutely. And you know, what we're always looking for, any kind of use. I mean, anything you're going to use land for. You know, but a structure on it, that always means, you know, that it's being used for something. But it can also apply to things that wouldn't necessarily require a structure.
And the last one is demand, and kind of demand is kind of what it says. Demand has to do with the number of people that are looking to buy or buying property within that area. And so, you know, we looked at you know, scarcity as far as how many properties are available, and that's going to also kind of tie in with demand as well.
Yeah, this is basically how many buyers, you know, are out there looking for this type of property,
exactly.
Or, you know, or how many potential buyers am I working with? It's just kind of the flip side of that. And yeah, it's also important, you know, because it, you know, it basically is what it determines what your buyer pool will be. You know, your potential pool of buyers. It really kind of comes down to, you know, it comes down to what the demand is.
Yeah.
So, you know, if we're looking at property, we kind of evaluate those things, and you'll do a lot of those things naturally as you're looking at property, whether you realize it or not, you know, as you start to look at more and more of the properties. But One of the ways that we will determine property value is through comps. These are different property valuation methods. There's 3 of them here, but comps are the first one. And it's the one that we use most commonly because the other valuation formulas are really more related to specific industries sometimes, or related to things like insurance values or business values, things that are more complicated and less applicable to what we're doing. Normal comparable market formula tends to be the simplest way to see what properties are actually selling for and what they're worth.
Yeah, I mean, in most cases, it's going to be the only method that we're going to use. So it's the other 2 methods we go through and talk about in detail in the home study program. But like the net operating income, that has to do with the commercial properties and the rents that they have come in, and how much does that essentially, how much is that rent essentially that income? You're looking at more like an income property. So as we're looking at investors at real estate, we're only going to use the comparative market formula in 99% of the scenarios that we're looking at. And really, when someone sells a home, it's likely that they're going to do a comparative market analysis to determine the value. If that's through a realtor, if that's something that they kind of figure out on their own. It's really the way that real estate agents determine the listing price. When I was a real estate agent, I would do a comparative market analysis and then go and present a presentation to the property owners that wanted to sell their property and say, okay, this is what your home will actually sell for, and explain why, based on homes that have currently sold or are currently for sale that are very similar to the home that's listed.
Yeah, and so, basically the idea, and then we're going to switch over and we're going to look at some of it live and do some, but basically we want properties that are both close geographically, or as close as possible, but that also share similar attributes, similar property attributes. So we want to see properties that are close to the same size, have some of the same features like a 2-car garage. We want to match up as many of those features as we can, because it makes it more accurate.
Yeah, absolutely. If we're looking here at an example, let's say that we have, 3 different homes here. We have a home that we're looking at, and we want to find comparables. We have an 1,800 square foot 3-bedroom home with 2 baths. Well, if we found 3 different homes here, home number 1, home number 2, home number 3, we can see that they're all very similar. We're built within 10 or 15 years of each other, are kind of close on the square feet, but are the same bedrooms and baths. And we can see that they sold for 107, 110, and 105. So essentially they sold between $62, between $55 and $62 per square foot.
Yeah, which I like breaking it down by square foot too, because it's really it's what it comes down to. I think when you're trying to determine what real estate in an area is selling for, once you know roughly what the dollar per square foot is in that area, it makes it a little bit easier to value the property as well. But using this though, you can pretty well figure your price out down to within well, really you should be able to figure out exactly what you want to sell it for. But you should be able to figure out what it's worth essentially. Based on what these other homes have sold for, and also how long it took them to sell. If you've got things that are selling in the first week, 2 weeks, then they could be underpriced. If it's sitting there for 30 to 60 days, it might be about right, and if it's sitting there forever, it might have been priced too high to begin with.
Yeah, exactly.
So
let's go through just the last couple ones. It'll help us go and actually look at some of the comps. So how do you find comps? Well, there's really 3 different ways, or 3 ways that most people will use. First one is property value websites, also county online records, and then real estate agents would be the 3rd.
Yeah, in fact, and I think we could look at each one of these. We use the property value websites quite a bit. Why don't we take a look? Yeah, in fact, let me switch over. And, actually, here, maybe we'll take a look at this first, and we'll go and actually we'll just be live. Let me switch this. There. Oh, there we go. Okay. All right. That should be working now here. Okay. So what we were doing here is we were actually looking through a sale. There's a really good sale coming up in Hernando County in Florida, and they don't do a ton of sales. It's coming up in January, and they have around 45, 50 properties. Take a look here. 57 is what it started with. They're still at 50, but this is going to be on January 3rd. And so we're looking at some of that, but we're going to start here to grab the properties that we're going to use here for a comp, so we can basically kind of show everybody how exactly it might work. Let me make this bigger too. Okay. Okay, so the property we're actually going to be looking at here first is this one right here. We'll use this as kind of our example here as the property that we're going to try to value out and get comps on. And
one thing that's nice, we can see that picture was taken, what, last month?
Yeah, in fact,
less than a month ago.
Yeah, the picture was taken on October 17th. So it's less than, it's basically just a month old. It's really recent here. And other things that we know about this particular property, value on it is excellent. It's quite a bit higher, I think, than what the assessed value is.
One thing I just noticed about it is you can see that there's car right there, but then if we look at the property owner, we can see the property owner lives in Ohio, which may mean that this property is currently a rental. So it's possible that if we bought this property and the rental, there was somebody in there, we could automatically just continue renting it to them if we wanted to.
Yeah, and knowing that somebody is living in it, this recently, or it's been used up to this point, is an excellent sign. It tells us that it's got to be in somewhat livable condition inside, and from the outside it doesn't look bad either. But that's always a good sign that somebody's been living in it, because that it can't have, the number of problems it has have to be limited.
Yeah.
Okay, so a couple of things that we want to do with the property, and the first site that we ended up using the most, probably initially with values and to find comps, we use Zillow a lot for part of it.
Look right there.
Oh yeah, MLS listing. That's interesting.
I haven't seen that before. Huh?
Yeah, I don't even know what that is. That's the one I'm looking at here.
So essentially, we're looking at a single-family home here. You can go ahead and check it on Google Earth or Google Maps, which we'll generally do. So we see that this picture is from 2011, and the picture from 2017 looks like it's, if not is in good condition.
Oh, it's in
better condition.
Yeah, it's in better condition in 2017 than it was. It's in better condition right now than it was in 2011, which means that somebody probably it was either purchased, somebody started living in it, and taking care of it.
You can see when it was bought by just going down and clicking, and sometimes that's helpful just to get an idea. It's about 1993, so they've owned it for quite a long time. Warranty deed. What makes that nice as well is that it's not going to be a complicated title.
Yeah, it's a really simple ownership history with it, because essentially the last transaction on the property was with a warranty deed, and that's always a good sign. When you're looking for properties that'll be easier to take through the quiet title process, and that's because basically the real estate attorney needs to take you back. It needs to take the property back and to the last time that it had a warranty deed, essentially. And so the more simple the ownership history is, the less work the real estate attorney has to do, and the less it ends up costing you, and the less time it takes.
Yeah. So now we've got an idea of where the home is located, some of the characteristics. Now we can go ahead and check it just to see, what Zillow has the property valued for, and also to see what properties are currently for sale. So one thing that's nice is it looks like this property was listed for sale a while ago. It may not, obviously didn't sell, but there is pictures, and so these pictures may be a little bit older, but we can see the inside, and we can see that it's pretty clean, a pretty clean home overall. And this isn't something that we're always going to be able to get, but when we do get it, it gives us a good insight into the property, and also helps us to really determine the value.
Yeah.
Determining our bid cost. I mean.
Yeah. Something else that I also really like about the property is that its estimated value, at least according to Zillow and what we're seeing with the other comps, is quite a bit above what the county, what the assessed value is on the property, which they're assessing it at 45. But I always like when I see a strong value in relation to the assessed value, because it basically means that you've got a better cushion there, between making errors when you undervalue the property rather than overvaluing it, and so we end up using that quite a bit. But what we would want to do from here, if we were looking at the property, is we are looking at it.
Essentially just by clicking off the property, we can automatically see which properties have been for sale or sold, within the area, and so automatically we can see that there's some comps that are essentially there, right there, that we have access to start researching.
Yeah, this is a really easy way to do this right here. Although, I was looking on. We can also do it through the county website, as well, as far as finding some of the other properties that have sold. But Zillow makes it easiest here. Basically, all we have to do is just check the boxes for the types of properties that we want to see, and basically what we want to see are the properties that are for sale, and then also properties that have recently sold. So that's going to be the best indication of property value here. And once we adjust for that, the property that we are looking at here is this property right here. And we've got a couple that are really close to it, in fact, very close to it, and that are, I think, going to be pretty similar here to what we're looking at. We've got this one right here that what's currently listed for 75.
Yeah, we can see it's very similar in size. A 2-bedroom, 2-bath. Overall the home is pretty similar.
Yeah.
It's a little bit better condition. Maybe inside.
Yeah. So
maybe.
The bath, it looks like the bathroom still needs to remodel, and it.
But overall, very very similar property.
Yeah.
So this property here, of course, is for sale, so it hasn't sold yet. So maybe it'll sell for 70, maybe it'll sell for 65. That's just kind of determined. But this at least gives us a good idea of a property that's currently for sale and is only 2 doors down.
Yeah, and some of the other things. I mean, they were already. I'm sure they were using this as a comp already. I know that both properties are 2 beds, 2 baths, and they're roughly the same square footage. And let's see, other than that, their proximity.
They're built, yeah, and also the years to build. All of these homes are going to be built around the same time, within 5 or 10 years, within these neighborhoods. And so, if we were going to do a comparable, we could use this home as a comparable as one that is currently for sale.
Yeah, and now the for sale is great because it kind of gives you an idea of where the market is at. But the shortest sign is going to be in the just sold, or in the properties that have actually sold. You can look at a lot of those. There you're looking at what people are willing to pay and what things are actually selling for.
Yeah.
And so if we were to look at, let's see, right, this one here that is, so again, we are right here. So just on the corner here, it's sold for $71,000. We can take a look at this, and again, this is also a 2-bedroom, 2-bath. that sold for 71,000, and it looks like it was remodeled, probably on the inside.
Yeah, it looks
it's
nice.
it's really nice.
But it also sold for 71,000 out the door, and so overall, this here is another good example of a comparable. So even though the inside may be a little bit better than the property we're looking at, it's still going to be a very comparative property within 3,000, 5,000 or so.
Yeah, yeah, absolutely. And I think as we're looking at a lot of these, I think we would basically try to figure out the ones that look the closest and that seem to make the most sense, and basically we're going to use them to determine about roughly what to sell the property for, and that'll be partly based on what they sold for, but it's also going to be based on what we calculate the dollar per square foot to roughly be.
In fact, if we actually click on the property, it'll tell us how much this one sold for per dollar per square foot. If I can get a little bit further down, let's see. Let's see. Oh, it says it somewhere. I don't know why I can't see it now. Maybe I don't know. It's up there higher if it was.
Up there higher.
I don't know where it's at.
Of course, we could always do the math real quickly here if we wanted, and we can see that it is was 800 and something square feet.
Yeah.
Where's my handy dandy calculator here? Let's use my phone. Where the heck it's at here? Anyhow, we figure out the exact the exact dollar per square foot here, if with Julie, just with those two numbers. What happened to my calculator? Oh, my children must have erased it. It's all right. Everybody knows we would do the math and to figure out what the exact amount would be.
Maybe it's probably $65 a square foot or something like that.
Something roughly around that. But and that sold. That sold also in the last 3 months. Which the time frames are also a factor. Because sometimes you'll look at properties that sold, and if it was a year and a half ago, then the market may have changed somewhat, in that year and a half. There may be greater demand, but then that also kind of leads us here to the second part of what we would do, with properties in this area. Once we were able to do a couple of comps, and we pretty well knew what the value of the property was, we want to get an idea for the the first word in stud. It was the
scarcity.
Scarcity. There we go. Sorry. The scarcity and the demand. So to find the scarcity and the demand, basically what we want to do here is start looking for other properties in the area that are similar to it. So if it's a little bit different with something like a home, because basically when you have a home, then you can do comps on other properties. With land, a lot of times it is very important, because we want to get an idea of how much of the land is already out there, in the market. What is it selling for, and we want to see basically how much of it is selling for cheap. If we don't see any cheap land for sale, if it seems like the cheapest stuff we can find is for $20,000, then there's a lot of opportunity there for basically anything priced under $20,000.
Yeah, and one thing to add when we're looking at comparables for land, for properties with structure, we can use Realtor.com and Zillow to get a good majority of our comparables. With land, we're going to look for comparables in other sources as well. So what I mean by that is we can use Zillow, but Realtor.com will have a lot of land, and there's also other land websites out there like Land Watch and some other different land selling websites that are good resources as well to find comparables because a lot of times there'll just be land listed on those websites, and so at least we can see, how many properties are for sale within that particular area or county. How much are they selling for? What is the lowest property? That's something that me and Shade will always look for, is what's the cheapest property in the county. And if we get the cheapest property we can find for sale is for $6,000, and we're buying tax deeds for $500 or $1,000 a piece that are worth $10 to $15,000, we know that we could list this for $3,000 or $4,000 and still make a good profit on the property, and we could sell it for cheaper than anyone there, anyone that's essentially currently for sale. So when you're using homes, Realtor.com and Zillow can find most of them, but with land, we want to use some other things like Land Watch.
Yeah. Now, one of the ways that we'll do this is we want to search it out by area, and so we can do that according to county, or also according to
city.
To city. And what is that? Pull up here.
That's a nice home.
Yeah. There are some really nice homes in the in the sale that are coming up here. There's my Land Watch page. Oh, there we go. Okay. So essentially, we're just going to go in here, and we're just going to type in Hernando County, Florida, and then we're going to play around with the. We're going to look and see what the options are here, because we can basically decide what types of property we want to look at and value. So if we're looking primarily at for other types of property that be similar to a little piece of land, that we want to change some of the settings here. But we can narrow it down according to city here by price, and what we do sometimes is just start from basically take the pricing from the lowest to the highest and start looking at anything that comes in at the lowest to see what people are selling for. I'll see by size here, by the type.
Yeah, you can there's a lot of filters you can filter it down for. Really, the goal is just to find what similar properties are for selling for or listed for sale within the area.
Yeah. Now here. And we would start, and I wonder how much they got listed here for $1.
They're probably leases or something like that.
Something. Yeah, I'm sure it is. 1.39 acres here. See if we can get into some real prices.
Those are leases too.
Yeah, it's like, here we go.
Here we are.
Yeah, these ones are
3,500. It looks like it starts out.
Yeah. Let's see here now.
There's one for $3,000.
And these ones. We can kind of see where they're at. Okay, so about 3,500 really. Let's see if there's any.
There's one for $2,000 that's landlocked right there.
Yeah, it's some right here, huh?
It's on agricultural too. So I mean that's like pretty much junk land.
Yeah, that is pretty much just a junk property that we wouldn't use. But what's good about this though is that it does give us a we can basically see what the cheapest properties are starting off right here, and we've got some $3,000 stuff here.
Yeah, that $3,000 one looks like unlocked too, though. Yeah,
which is going to bode well for if you've got a property that looks nice.
It's on agricultural too.
Yeah, so far.
So really, the cheapest one is that thin lot starting at $35,000.
Yeah, and might be good to look specifically at a certain city because it looks like they've got a lot of property in that county here that we could look at, but not a lot of it is priced down. I guess it's not priced down under that, and we can see some other properties here, starting up at $4,000.
Yeah.
But what would be nice about this though is that you can decide exactly what you want to sell a property for, whether it's worth wholesaling. If you check this stuff beforehand, you could decide that you don't want to buy the properties you've been considering buying at all. You might you might start digging it and see that for whatever reason, maybe the county is just saturated with a ton of land to buy right now, and or whatever it might be. It's nice to use these types of services to get a feel for what things are selling for, right now.
Yeah, definitely. Determining what the value is and making sure that there's, that the property has those things we talked about instead, like scarcity and demand, and really use and value. That's what we're looking for. We're looking for properties with use and value, and then of course we're looking for properties that we can pick up for incredible discount.
Yeah, and let's say we're looking around, and the cheapest properties that we can find anywhere here are pretty much selling for $5,000 and up. If we can pick up properties for for a couple $100 there, we're not going to worry about it too much, because there's a lot of profit margin there, and you could always unload a property for for a lower price if you needed to. You've got a lot of room to work. And yeah, a lot of these really don't look great, and they're out in the middle of nowhere so far. We haven't seen we haven't really seen much yet that have been very appealing. I think it's a trailer park, huh?
Yeah,
that's what it is. It's a trailer park, and even that piece of land is $6,000. So really, that $5,000 mark really is about the lowest that we see of anything that's at least listed here, which would bode pretty well for the properties that we were looking at, especially any of the properties you can pick up for
you pick them up for $2,000.
Yeah, I mean, there are some incredible deals coming up here on this sale here in a couple of weeks. There, some of the other ones we were looking at before, like for instance, something's wrong with that. Back up one, and right here you can look at some of these.
On page 5, there's that one here is kind of interesting for $2,500. It's a little trailer, but there was a bunch of comps available on it.
Oh yeah, I'll click on that. Let's go up there. Yeah, let's click on that. Take a look at it. It's right here.
But you're looking at $2,200, But when I was looking at the comparables, there was, homes that wasn't very many for sale, but there was quite a few that had sold. They sold for about 20 to 35, 40 grand.
Yeah. Yeah. Also, mobile homes can work out, pretty well. I guess in some places they're very common, and they can work out, decent as even rental properties or income properties. They can work out, or setting them up with seller financing.
Yeah, from an investor standpoint, don't be afraid of mobile homes.
Yeah.
Especially if you can get them in good price and good condition.
Yeah.
On their own land.
Yeah, absolutely. But yeah, if we looked at this stuff, we couldn't find any of that. We would, we'd feel pretty comfortable with pricing and stuff moving forward. We know, about where the bottom dollar is, and that we've got good profit margins. So, anyhow, I think we've already run over here a bit. But yeah, we would love to take topic by request. Some of the New Jersey questions are interesting, and I've got to be thinking maybe we can do one here soon about some of the New Jersey sales. But if any of you have other ones that you're interested in, or something you'd like us to cover in the weekly webinar, just send us an email and let us know what it is. We'd love to hear from you, and yeah, we'll see what we can do.
And before we end quick, let's go to the website real quick, and let's show just where they can find the inventory.
Oh yeah, the property inventory here is right here under. There's a couple different places it's listed under. It's listed under the services under secondary program, you can click there. But if you go to List Center, there's a direct link to property inventory right here, and we've got them listed right here.
Yeah, we're actually going to be listing some additional ones. So some of these will be ones that, essentially we're going to be doing through our partner, Mark. And then we'll be adding some additional ones that we're just finishing up that me and Shade purchased as well. But you see there's quite a few different properties, single-family homes available as well. If you click on any of them, then it'll actually pull up additional property information. And if you're interested in any of these, you can contact us, fill out the form, and we can contact you, or either us or Mark will contact you and talk to you more about it.
Yeah, we've got a lot of information though on each one of the links there. So yeah, if you want to look at any of the properties and get additional information, click on that and let us know if you need any more information from there. So again, thanks for joining us tonight. We'll get the recording up, and please, let us know if there's anything we can do to help. If you still need the initial investor strategy call, then send us an email, and we'll see if we can get something scheduled for you. We'd love to talk to everybody.
Yeah, you guys have a great week.
We'll see you.